So in fact, you are saying asset are the things that we are using in the business. Business. Okay. Let me start here. Asset are the possession of the business, or asset are the property of the business. Every business, in order to be able to function or to operate, we need assets so that our business can be able to run. When we talk about asset, we look the property of the business or the possession of the business. Like for example, now you are sitting on a chair, okay? You are writing on top of the table. A table is an asset of Brooklyn, okay? So that they can be able to do what? To run and operate their business. Because if I say lower avana ditilo avana ditafula no dula la mane la moka. Ero ke di asset ja bona. Ra bushana, okay? So assets are categorized into two categories. Renale non-current asset, rabale current asset. Okay. As much as asset I create the asset, they are fapan. So as much as the fapan, they are categorized into two categories. Renale non-current asset, rafeja rabale current asset. Non-current asset. We are talking about those assets that can be used for a long-term period of time. When we talk about current asset, we are talking about those assets that can be used for a short-term period of time. Simple as that. So, the owner's equity, we are talking about the operation of the business, the income and expenses that help the business in order to be able to operate on a daily basis. Then liabilities, we are talking about the obligations of the business or the debts of the business. Remember, the business cannot be able to function without borrowing money from the bank. At some point, there are some of the things that the business cannot be able to afford to buy cash. Like for example, if the business want to buy a vehicle, your business, we afford to buy a car with cash. Or a building cash. So in order to obtaining a loan, and a loan again liability. So our liabilities increase on the credit side, decrease on the debit side, always. Then error accounting equation. So when we say asset is equal to owner's equity plus liability, what does that supposed to mean? It means asset is 10,000. I get this one your deal owner's equity lower 5,000. Let me say 5,600. I get plus liability liability in this regard I guess this is an equation. But an amount of an asset which is 10,000. They've also given you an amount for owner's equity which is 5,600. Okay? So we must be able to get what? We must be able to get our liability in this regard. So how much is going to be our liability? 4.4. Again, error in this regard, we are going to work out our equation. Error liability is equals to, then Rafika 5,600. Yeah, the equal sign. Again, the equal sign, it means automatically changing. It changes the sign. Hey, kumane lower pukube ya tsila mu ya isa pukube kimtia. Again, so error 10,000 minus 5,600. Again, 5,600, 10,000 minus 5,600 is equals to how much? Is equals to 4,400. error 4,400 king liability area. So now we go back to the equation, right? Prove or value ya agree now. Error report asset is equals to owner's equity plus liability. Asset area is how much? Asset area is 10,000. Owner's equity area is how much?
5,600.
5,600. Then liability area is how much?
4,400.
4,400. So 5,600 plus 4,400 10,000. It means our asset asset is equals to what? Owner's equity plus liability, because we get 10,000 down. That's what it means. The equation. Error asset is equals to owner's equity plus liability. That's what it means. Simple as that. Again, now we proceed. I got a trading account. If I prepare the trading account, we determine the gross profit. If I get gross profit, I transfer profit and loss. Then after that profit and loss, I determine net profit. Simple as that. Then after we go accounting cycle income statement. What is the purpose of income statement? What is the purpose of compiling income statement as the business?
I think we're going
to in form of what? Okay, the purpose of income statement is to determine whether the business has made a profit or loss. Again, it's not always the case that the business will always make a profit. At some point, the business can make a loss. So we, as the business, we compile income statement so that we can be able to determine whether the business has made a profit or loss. Simple as that. Then, after that, in order for us to be able to compile the income statement, what we call it, pre-adjustment trial balance, or post-adjustment trial balance, or debt trial balance. So, trial balance, I know the adjustment. We are just going to compile our income statement without any adjustment. Pre-adjustment trial balance. Compile income statement. Return to the adjustment pre-adjustment trial balance so that we can be able to compile our income statement. We must also take the adjustment into consideration, because keep pre-adjustment trial balance and pre-adjustment trial balance before taking the adjustment into consideration. Again, Rafeta Ravali post-adjustment trial balance. This one, it means after taking the adjustment into consideration. What does that supposed to mean? It means when we compare our income statement, we are no longer going to look at the adjustment, because the adjustment has already been taken into consideration. We are just going to use the post-adjustment trial balance without looking at the adjustment, because they have been already taken into consideration. Then we compile income statement. Then this is our balance sheet. Our balance sheet at that time